So your fund balances in total, again, general fund will go down about 1.2 million. Capital projects will go down about 4 million with everything, all the projects we have going on. Internal service is going to go down about 974,000. So looking at a total decrease of $6.3 million in our fund balances. So we're going to go from 44 million at the end of 23-24, about 38 million at the end of 24-25. So for our new budget for 25-26, same slide that we show you every month. Eric and I sat down, we went through a lot of line items, looking at our trends and what, some other, what the Fed has done or not done. So we increased our retirement revenue by about 300,000 based on what we received last year, and given the rate did tick up a little bit for the retirement line item. Investment income, we increased that 200,000, given that the Fed did not take action last week, and they're only anticipating 2 moves, and that won't be till later in the year, maybe 3, but it's around. I'm guessing based on what I've read, two reductions, and if you think about how we receive most of our funds, about $60 million we receive in the first 4 months of the school year, June, July, August, September, October, and the discount and the face period. So those monies will be invested, and we'll schedule those out based on our cash flow. So we're gonna have some our cash will go back up, and the rates will still be high at that time when cash comes in. Transportation subsidy, we just received our final 24-25 subsidy. We took a look at that, and I think we increased 25-26 by about 150,000. The homestead farmstead, that calculation yields an additional 139,000. And then due to what we're seeing in the use of facilities, we increased that line item of 20,000 and adjusted our school-based access program revenue by 25,000. In terms of expenditures, we've received an update from Provident Energy for our electrical costs. That's an additional 93,000. The process we go through for salaries, when we start the budget, we take the people that we have at that time, and we develop a benefit directory, and everybody gets rolled into the budget based on who we have at that time. We update that in April, May for any changes that have occurred throughout the year at this time. We allocated some funds to add benches to the team rooms in the middle school, additional funds for instruments, and some smaller changes there for the maintenance budget and other miscellaneous items. So we added $171,000 to the expense item. And then you see the net result of that towards the bottom. So it's a net decrease in the use of fund balance of $663,000, going from 6.5 million in use of fund balance to 5.8. So here's your budget. Use of fund balance of 5.8 million, local revenues 70.7 million, state revenues 42.8 million, federal dollars of 1.2 million, for a total revenue budget of 120.7 million. Total expenditures, including other financing uses or sources, is 120.7 million, and again, we're using 5.8 million fund balance with a 3% tax increase that goes to your millage goes to 36, 3% tax increase, and your adjusted index of 5.3% is what you could raise taxes to. Breaking down the use of fund balance, budgetary reserve 1.2, funds of 1.1 million, and then your use of unassigned fund balance of 646. And here is a roll forward of your fund balances. Your general fund balance would be about 24 million at the end of next year. Capital projects down to 1.1 million, and your internal service fund down to 4.1 million.